The U.S. House of Representatives adopted a budget blueprint pivotal to advancing President Donald Trump's agenda, following intense negotiations led by Speaker Mike Johnson. The budget narrowly passed with a 216 to 214 vote after overcoming opposition from conservative factions within the Republican Party. These factions, including leaders from the House Freedom Caucus, initially opposed the budget due to insufficient spending cuts, demanding more significant fiscal savings. The final agreement promises at least $1.5 trillion in savings, a substantial increase from the Senate's initial proposal of $4 billion, which was deemed inadequate by fiscal conservatives. This budget adoption marks a significant step in the reconciliation process, crucial for preventing a year-end tax hike and advancing Trump's priorities on immigration enforcement and defense spending. The Senate had previously passed the blueprint with a narrow 51 to 48 vote. The successful passage in the House reflects a strategic victory for Johnson, Senate Majority Leader John Thune, and Trump, particularly as lawmakers enter a 2-week Easter recess. The budget directs committees to detail the initiatives and identify further savings, aligning both the House and Senate on a path to more sustainable fiscal management. However, the decision has sparked concerns among constituents about potential cuts to federal agencies and economic instability, underscored by recent market volatility and rising consumer prices amid ongoing U.S. tariff disputes.
Connecticut's recent legislative decision to restrict earned wage access (EWA) services has significantly impacted working families, according to a study by the University of Connecticut commissioned by Daily Pay. The research highlights that over 2/3 of respondents previously benefited from EWA, using it primarily for essential expenses like food, transportation, and housing. Since the shutdown, many families have struggled to meet basic needs, resorting to high-interest credit options or selling personal items. The study underscores the financial strain on women, particularly those with children, who are disproportionately affected by the lack of EWA, exacerbating their already precarious financial situations. The findings have prompted calls for legislative reconsideration, with industry leaders like Phil Goldfeder of the American FinTech Council advocating for regulatory frameworks that balance consumer protection with access to financial tools like EWA. Senate Bill 1396 is highlighted as a potential solution, aiming to restore EWA services while ensuring transparency and safeguarding consumer interests. This development is particularly crucial as families face rising living costs and reduced food benefits, emphasizing the need for accessible financial support mechanisms to prevent reliance on predatory lending practices.
The cryptocurrency market is experiencing a significant downturn as major digital assets, including Bitcoin and Ethereum, have plummeted over 14% in the past week. This decline is part of a broader market correction fueled by rising recession fears and escalating trade tensions, particularly following the latest round of U.S. tariffs. The downturn has intensified concerns about a prolonged bearish phase in the crypto space, prompting traders to cut their losses. As investor sentiment turns cautious, the market is witnessing a shift towards AI-powered crypto solutions, with projects like Ozak AI gaining traction. Amidst the market turmoil, Ozak AI has successfully raised over $1 million in its ongoing presale of the OZ token, which is currently in Phase 3 and priced at 0.003, marking a 200% increase from its initial price. The company, known for its AI-driven trading tools, prediction models, and decentralized analytics network, offers an alternative to emotionally driven trading by leveraging advanced data analytics. The OZ token presale is attracting interest due to its potential for high returns and staking rewards, appealing to investors seeking innovative solutions in a volatile market. As Ozak AI positions itself as a leader in AI-powered crypto trading, it highlights the growing demand for smarter, data-driven approaches in the industry.
Nigeria's Eurobond market has experienced significant volatility due to escalating global trade tensions following U.S. President Donald Trump's imposition of a 10% import tariff on all foreign goods. This move, aimed at countries with perceived unfair trade practices, has led to widespread investor concern and sharp sell-offs in Nigerian Eurobonds. As of April 9, 2025, yields have surged to 11.21%, an increase of 163 basis points since the end of March. The short end of the yield curve, particularly the November 2025 Eurobond, saw the highest pressure, rising by 282 basis points, while the long end, represented by the September 2051 Eurobond, increased by 97 basis points to 11.65%. These developments occur amidst declining international crude oil prices, with Brent crude at $63.7 per barrel, exacerbating Nigeria's economic challenges due to reduced foreign exchange earnings and a weakening naira, which has depreciated by 4.8% month to date. The central bank's interventions have been insufficient to stabilize the currency. Financial experts, such as Victor Onyema from Norenberger Asset Management, note the severe, immediate market reaction, but suggest potential stabilization as markets adjust to the new trade environment. However, the broader fear of a global recession persists, with investors increasingly seeking safer assets amid uncertainty. This concern is heightened by the possibility of multiple interest rate hikes from the U.S. Federal Reserve. As global markets remain on edge, attention is focused on U.S.-China trade dynamics and potential policy responses.
Costco has announced an increase in its membership fees, marking a significant move in its business strategy as it continues to differentiate itself from competitors like Walmart and Target. Unlike these superstore giants, Costco operates on a membership-based model, offering bulk goods at discounted prices. The fee hike is expected to bolster Costco's revenue streams, which predominantly rely on membership dues and sales volume. This decision aligns with the company's strategy to enhance its financial stability and shareholder value in the face of rising operational costs and inflationary pressures. The fee increase could have a mixed impact on Costco's customer base. While some members may be deterred by the higher costs, loyal customers who value Costco's unique shopping experience and cost savings on bulk purchases are likely to remain. Furthermore, this move might influence market dynamics by prompting competitors to reconsider their pricing strategies. Analysts will be closely monitoring Costco's membership retention rates and sales performance in the coming quarters to gauge the long-term effects of this decision. Overall, the fee hike reflects Costco's confidence in its value proposition and its commitment to sustaining growth amidst a competitive retail landscape.
Paul Atkins has been confirmed as the new chairman of the Securities and Exchange Commission, SEC, a decision welcomed by the Investment Company Institute, ICI. Atkins, known for his investor-centric approach and comprehensive understanding of regulated funds, is expected to prioritize several initiatives aimed at enhancing the financial ecosystem for American investors. The ICI, representing the interests of the investment fund industry, anticipates that Atkins will advocate for policies such as allowing funds to offer both exchange-traded funds, ETF, and mutual fund share classes, expanding retail investors' access to private market strategies, and reforming the fund proxy system. These changes are poised to benefit approximately 120 million American investors by potentially increasing investment options and improving market efficiency. The confirmation of Atkins follows the interim leadership of Mark Ueda, who served as acting chairman. Ueda's tenure was marked by decisive actions addressing immediate concerns within the fund industry, contributing to a more responsive SEC. Atkins's leadership is expected to continue this trajectory, focusing on regulatory reforms that could have significant implications for market participants, including increased investment opportunities and streamlined regulatory processes. The SEC's direction under Atkins will be closely watched by market stakeholders, given its potential impact on market dynamics and investor access to diverse financial products.
The Texas Stock Exchange, TXSE, has taken a significant step forward as the U.S. Securities and Exchange Commission, SEC, has published its registration and application to begin trading. This development marks a crucial phase in the regulatory approval process, allowing for public commentary on the proposed exchange. TXSE Group, Inc., the parent company, aims to challenge the dominance of established giants like the New York Stock Exchange and NASDAQ by offering what it describes as a more CEO-friendly trading environment. This new exchange is positioned to enhance Dallas's reputation as a major financial center, trailing only New York in terms of financial workforce size and capital infusion. Led by CEO James Lee, TXSE is backed by significant stakeholders, including prominent figures in the energy sector. The exchange's rules and operational mechanisms, as outlined in the SEC filing, promise a different approach to trading and listing, potentially appealing to companies seeking alternatives to the stringent compliance costs and diversity mandates of existing exchanges. The emergence of the Texas Stock Exchange could prompt shifts in market dynamics, offering companies a new platform that may align more closely with their strategic and financial objectives. As the public comment period progresses, stakeholders will closely monitor how TXSE's unique positioning influences the broader trading landscape.
Snowflake Inc. has secured the Department of Defense (DoD) Impact Level 5 IL5 authorization, allowing it to offer high-security solutions on AWS GovCloud US West for controlled unclassified information. This development enables the DoD to utilize advanced data analytics and AI-driven insights via Snowflake's platform, marking a significant expansion of the company's government-focused operations. The IL5 authorization is crucial for supporting mission-critical applications in areas such as financial management, logistics, cybersecurity, and intelligence, underscoring Snowflake's commitment to providing secure, data-centric solutions to the DoD and its partners. Despite this positive development, Snowflake's shares declined approximately 5.06% to $143.50 on Thursday, retracting from a notable market rally on Wednesday. The broader market had surged following a temporary 90-day pause on reciprocal tariffs announced by the Trump administration, which contributed to a significant one-day gain for the S&P 500. However, markets are experiencing a pullback, reflecting volatility amid ongoing economic uncertainties. Snowflake's recent achievement in securing IL5 authorization positions it strategically within the public sector, potentially enhancing its long-term growth prospects despite current stock market fluctuations.
LightSolver, a pioneer in laser-based computing technology, has appointed Colin Bell, former CEO of HSBC Europe, to its advisory board. Bell's extensive experience in the banking and financial sectors, including roles as Group Chief Compliance Officer at HSBC and Head of Compliance at UBS, positions him as a strategic asset for LightSolver's expansion into the financial industry. The company has developed an all-optical laser processing unit, LPU, capable of solving complex computational problems at unprecedented speeds, which could revolutionize areas such as risk management, trading, and portfolio optimization. The addition of Bell to LightSolver's advisory team is a strategic move to leverage his deep industry knowledge and network. This development comes as LightSolver aims to scale its commercial operations and integrate its laser-based computing solutions into real-world financial applications. The company recently secured a €12.5 million grant from the European Innovation Council to further advance its technology, highlighting its potential to disrupt traditional high-performance computing systems. Bell's involvement is expected to enhance LightSolver's go-to-market strategy, particularly in optimizing financial computations and simulations, thereby offering transformative solutions to the financial sector.
Payson has announced a strategic partnership with Tink, a Visa solution, to enhance its open banking payments infrastructure. This collaboration aims to improve the speed, security, and coverage of Payson's international money transfers. By leveraging Tink's advanced open banking technology, Payson enables customers to authenticate and fund transfers directly through their bank accounts, reducing the need for manual data entry and minimizing security steps. This integration is set to provide a seamless and efficient payment experience, expanding Payson's capabilities into new markets and supporting a broader range of banks and financial institutions. The partnership signifies a critical development in the fintech sector, as open banking continues to revolutionize how consumers manage financial transactions. By providing direct bank authentication, Paysend and Tink enhance transaction security and reduce the risk of errors and fraud. This move not only strengthens Paysend's position in the competitive digital payment landscape, but also aligns with the broader trend towards more integrated and user-friendly financial services. As open banking gains traction, financial institutions and fintech companies are increasingly focused on delivering faster, more secure, and hassle-free payment solutions to their customers.